Yes, we all know that there's two things certain in life: death and taxes. And the U.S. is peculiar in the sense that we have to detail it, when in many other countries they already have the information and you merely acknowledge it. Here are some of the current rates. They used to be higher, but then they had a lot more deductions then. The income tax is on the right, pretty darn high. You have a special 9% discount for if you hold USA qualified stocks. That's only in the cash account. Taxed, but you do get in the middle brackets a 15% forgiveness. Some states do and some states do not tax it. Capital gains get a treatment, and in most categories it's the same as the USA qualified dividends. Most people have a preparer do their taxes for them, both federal, many times state, sometimes even city, and nothing wrong with that. But you're still responsible if they make a mistake, so you still should be familiar. There are some forms. There's the instructions. Also here we see the one for the seniors. You know what? That EZ, called EZ, is no more. There's a more descriptive publication called Publication 17. Well, here is the form. I'm using last year's. That's okay. It's about the same. And you see most of the information there is perfunctory. You can skip that presidential election campaign box. It's only a couple of bucks and it doesn't affect your taxes, and it wasn't very effective. You choose your category, single, married, separate, head of household. That means you got kids. Did you have any of those digital assets? Bitcoin? No. So let's see, standard deduction. Watch it. This excludes it, so be careful. Are you old, blind? Check those boxes and list your dependents. Now we come to the numbered lines. 1A, the amount from your employer. Those are called W-2s. By the way, see that corner there? That's where you're going to attach all them forms, and there's one for you, one for the Fed, one for the state, and sometimes even the city. Well, we add up all the others. We're still on line 1, and then we come to lines 2 through 6. Notice there's A on the left, B on the right. On the right, the B's, you do adjustments. Let's see. Well, line 2 is interest. Tax exempt goes on the left. Now you get them qualified dividends. The qualified amounts go on the left. Use a separate tax rate, saving you about 9%. Then you have IRA distributions, pensions if you're no longer working, Social Security benefits, usually taxed at 85%. And here are the states that do tax Social Security. We see a little box comes next, if you know what it means. Otherwise, skip it. Now we have 7, capital gains. That's a Schedule D. We'll look at it. The most you can deduct is $3,000. Then you add extra stuff, subtract some stuff. Then you come to the standard deduction. It's based on all those boxes you've checked upstairs, marital status, age. That's not a complete list. You have to see the instructions to even get larger ones, for age. And noting that it's now the case that the standard deduction will often exceed the itemized deductions, as we will see. Line 11 is a special case if you know about it. Otherwise, we can notice there's qualified business income deduction, line 13. Again, same argument. So you subtract the standard deduction in line 12. That gives you your adjusted gross income for tax purposes. So you're going to be taxed on that amount. Now, if it's under $100,000, you have to go to a table, and it's set aside marital, single, filing separately, or over 100, you actually have to go to figure it, and you'll notice the brackets that are appropriate for you. For most middle income folks, regardless, it's about 24%. On the margin, noticing it steps up from base to base. Well, you're going to plug that figure in, line 16, and then you pull in some other stuff. Then you got a child tax credit. That's worth looking into. And you're going to add, guess what? Subtract some special stuff. You got some extra taxes. And you finally come up with a final tax bill. And that's on line 24. On line 25, you show the payment you've already made from the W-2s on A and the 1099s, from either retirement plans or gig jobs and the other ones. Add those up, and then you have the amount you have withheld. And there are some other worthy credits: the earned income credit, child tax credit, opportunity credit, reserved for future use. Oh my. And then from a third specialized schedule, you add them all up. Those are all your withholdings. Guess what? Now we're going to take the difference between those two. If you overpaid, then you get a refund. You can put in your banking information so they send it directly to your account. On the other hand, you may owe an amount, and you're maybe put in a little penalty. I let them do that. Normally $500 or less, there is none. And third party tax preparers, you got to be registered. And in fact, you're not supposed to do anybody else's taxes unless it's a member of the family, unless you're a registered with a number tax preparer. And remember, you're responsible, not the tax preparer. Sign it. Use blue ink. I've learned that the hard way. And fill out the information. And you send it to a special address different for each state and different for whether you're getting a refund or making a payment. It's in the instructions. That's Schedule A for the itemized deductions, not what it used to be. Well, let's see. You're going to have medical stuff and dental stuff. Some people even throw in the insurance. But you know what? It's only good if it's above 7.5%. Good luck on that one. Then you got state and local taxes. And these come in two forms, but you can't get both. If you have a state with an income tax, you probably want to take that one. Otherwise, you can take a general sales tax. Add in those state and local real estate taxes, local personal property tax. You know what that is? That's your car license. Add those up. And guess what? It's limited at 10 grand. See what I mean? You can add another one. In the case of California, your state disability insurance named SDI. And separate from that, and luckily so, is interest you paid on your home. That includes points, some fees usually, and the interest expense itself on the first two homes. Separate from that is interest expense on your investments. Then we're going to add in maybe gifts or cash. $250 is the amount that you got to start documenting it. And you might have casualty losses. That requires a form. There's some others. All the goodies for the teachers have been truncated. And you add all these up, and you may have to check the box. I often do. I'm preparing this, but I'm not going to use it for my standard deduction. Why? The standard deduction's often bigger. Now we come to Schedule B, interest and ordinary dividends. I make copies of them back to back. Interest expense, add all those up. Then we have dividends, and you'll put the gross amount of dividends, noting you adjust for the qualified dividends for that special 9% savings earlier. Then you got to check them boxes for any kind of foreign stuff. Well, the form that would be next would be C, but that's for commercial purposes. So let's go to D, capital gains and losses. They're separate into two groups, short-term and long-term. And you'll get a statement from your broker telling you whether to check box A, B, C, or D, E, F. Nowadays, it's just the net amount, far easier. You'll amalgamate all of them. Don't forget the tax loss carryover from the previous year, and you'll see why. Why? Because you're limited to a $3,000 loss. And to be reminded, this is for academic purposes of familiarity, no liability implied, inferred, and also get somebody